Electric vehicle stocks have been on an incredible run over the past few months. In just the last 3 months, shares of Tesla are up 69% and Rivian is up 53%. But operationally, what's happening in the EV market is not supporting these startup EV companies, these smaller EV companies, gaining this much in value when legacy companies are actually the ones taking market share. We just got data in the last couple of days about how many vehicles were sold in 2024. The surprising news is that Rivians aren't selling particularly well. That has a lot to do with their production issues, but also has to do with their price as they try to ramp their production in 2025 and beyond. Tesla is the big one. Tesla had reported the first ever decline in vehicle sales in 2024. So the stock is up despite the fact that deliveries are down. And who is taking market share? Yes, it's the old companies like General Motors and Ford. I'm going to go through these numbers and go through some surprising stats, like GM and Ford both sold more electric vehicles in the last quarter and even in the last year than Rivian did, despite the fact that Rivian is one of the hotter stocks on the market today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go right to the source with all these companies and exactly what they reported for the fourth quarter. I'm going to start with Tesla because they're the most valuable company, but you can see that production and deliveries, 459,000 and 496,000 respectively. Interestingly, Tesla actually reduced their inventory in 2024, so that should be a good thing from a cash flow perspective. But if you take a step back and look at their deliveries, this is the trailing 12-month production in red and delivery in blue numbers. And what you can see is this is no longer a growth company. This is a company whose production and deliveries are in decline at this point. And what's interesting is that this is not what's happening throughout the industry. Here's the same chart from Rivian, and you can see that Rivian's production and deliveries are also in decline. That is in large part because of production issues that they've had in the middle of 2024. If you look here at the recent release on January 3rd, the production was 12,773 vehicles in the quarter. That's a little bit below where they were in the third quarter of 2024. And there were 14,183 deliveries during the quarter. Now, this was a little bit above expectations. That's why the stock reacted positively. But let's make no bones about it. This is not good numbers when you compare it to other companies in the market. I'm going to start with General Motors. Sales up to 2.7 million deliveries, up 4% from a year ago. Now, I do want to put a caveat on that. At the end of December, GM had almost 600,000 vehicles in dealer inventory. So that's not held on their balance sheet. It's held on dealer balance sheets. That was up from 457,000 a year ago, but it is down from the third quarter. End of the third quarter was 627,000 vehicles in dealer inventory. Now, these numbers are about what we expected, but without that, you wouldn't have this kind of growth. So think of this more as being flat production for General Motors overall. But where they are growing, and this is not in question, is in the electric vehicle market. This is GM's US EV sales, 44,000 units in the fourth quarter of 2024. That is about a 12% market share. What are they selling? Well, they're selling almost 8,000 units of the Blazer EV, the Bolt, not yet in production yet for their next generation Bolt. So that number is really low. The Equinox is the big one. They sold more Equinox EVs than Rivian sold vehicles in total in the fourth quarter. And then you have relatively small numbers for things like the Silverado EV and the Sierra EV, essentially the same vehicle there. Now, if we go over to Ford, the numbers don't look quite as good as General Motors. Their total electric vehicle sales in the fourth quarter, a little over 30,000. But you include hybrids and you get up to 77,000 of electrified vehicles, as they're calling them. And both of those were up. So Tesla sales declining. And you can see these year-to-date numbers here on the right. Tesla sales are declining. Total electric vehicle sales, Ford was up 34.5%. So the big story here is that the EV market is growing, not growing as much as we maybe thought it was a couple of years ago. But the EV-focused companies, Rivian and Tesla in particular, but we could lump Lucid into this as well, they're not doing particularly well. They're not gaining a lot of market share. In fact, they're losing market share in 2024. And the companies that are gaining market share is the legacy manufacturers like General Motors and like Ford. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. These dynamics are so important for EV manufacturers because this is a manufacturing business. This is a capital-intensive business that lives on the laws of supply and demand. if there's an increasing supply of a product in the market and there's not a commensurate increase in demand, you're going to see prices come down and margins come down. We have seen that over the last couple of years at Tesla, where they had a ton of demand during the pandemic when nobody else could produce vehicles. Tesla was basically the one company in the marketplace they could command a higher price, and they raised their prices as a result. Starting in 2023, they didn't have the same dynamic. And so what they had to do is they had to lower their prices. That's how you get to the chart that we show here. Over the past couple of years, Tesla's free cash flow has declined. Now it's a little bit volatile, and there are always one-time items in free cash flow, like are you building or are you reducing inventory? But the general trend is lower free cash flow for Tesla, and that will likely continue in the fourth quarter and into 2025 if deliveries continue to decline and they continue investing a ton of money in building out their GPU infrastructure. Look at Rivian as well. Rivian losing about $5 billion in free cash flow. How are you going to make that up when you're only making 10 to maybe 20,000 at best vehicles? They are going to ramp up that production in 2025 and into 2026, but they're going to need to build another manufacturing plant if they are going to ever get to free cash flow positive. That's just the reality of their economics as a business. So you look at Rivian's market cap of about $16 or $17 billion as I'm recording today, and can the company live up to that valuation in a market where legacy automakers like General Motors and Ford are taking market share and Rivian is losing market share? I think that's going to be a really tough battle for them, and they just don't have the balance sheet or the distribution to be able to take on those companies if they continue to improve their electric vehicle products. And that's really the story over the last couple of years, is that GM and Ford in particular have really improved their product lineup and their costs. So they're now competing head to head with these focused electric vehicle companies on a much more level playing field. And you can see in that chart that I showed earlier, both of those companies have positive free cash flow. So they have much more financial flexibility than you do, particularly at Rivian. Tesla is a little bit of a different story because they have a little bit different strategy. They're focusing now more on artificial intelligence and robotics, basically saying that we're not really a car company anymore, but cars continue to dominate their business. So I think the next couple of years are going to be really challenging for these focused electric vehicle companies, Rivian, Tesla, and put Lucid into that as well. A lot of the smaller companies have really fallen by the wayside, but those are the three players that still have relatively high market caps. And as these legacy companies start to take market share in the business, I think it's going to become harder and harder for them to reach any sort of sustainable business model. And that's really the challenge in electric vehicles. We are not fundamentally changing how we're moving in transportation. We're not fundamentally changing that this is a manufacturing business. This is not a platform like a phone or a personal computer. This is still a manufacturing business, and GM and Ford continue to be some of the better manufacturers in the auto business today. They are taking market share, and that's something that EV investors should note in 2025. I think this is going to be a year of reckoning because we're going to suddenly see that this is not going to be a winner-take-all market at all. But let me know what you think about the EV market today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.